Are you curious about our market here in Phoenix? Well, let's take a look because people have been wondering, what about the elections? Do we have a hot market coming? Let's take a look and see what's going on, and hopefully we can answer your questions. So, starter homes are the hot market here in Phoenix. That's the bottom line. That's based on our Crawford report. And as you can see, that means more for our first-time home buyers. We have more affordability and supply in this price range. So what does that look like? So we took the 3-bedroom apartments in Maricopa County, Q2 of 23, where we're looking at about $2,100 a month. So when we compare that to a 6% mortgage rate, and we're looking at a 2-1 buy down, and we will have a lender come in and talk to you more about what those things are about. We are looking at an estimated payment of about $2,159, which isn't bad. That includes taxes, insurance, and PMI. Then other people say, what about that permanent buy down of 1%? That will make it about $2,375 a month. So you're looking at the difference between a cost of owning a home and the cost of median rent. The only difference is about $100. That is huge for most people. But when we look at Pinal County, remember that was Maricopa, Pinal County, we're looking at the median cost dropped to about $310. And over half the properties in the last 30 days were all new builds that were sold. With the 2-1 buy down, estimated PMI, we're at $1,825 a month. But with a permanent buy down, 1%, we're looking at $2,006. Keep this in mind if you're thinking, oh, I'll just wait. Now, people are asking, what is expected 24? What shifts are we going to see? People are talking about the elections. We are going to be steady as far as appreciation and affordability. Income measures are starting to catch up now. One market that is affected most by the elections is the stock market. And you're like, so how does that affect our housing market? Well, in the last 4 elections, we have seen a positive move forward after these elections. So what does that mean overall for our housing market? The effect is on the luxury because we have a high percentage of cash purchases. Our investments, so a lot of people that are looking at investing, they're looking at the stock market. And also we're looking at our seniors where they are looking at their buying because they're usually cash as well. And they're looking at their portfolios before they make a decision. So keep that in mind. So what could that cause? That could cause us to be a little stagnant for a couple of months before we get into our spring market. And then after that, we're going to be pretty busy. So far in 2024, listings under contract over $1 million are higher than they were in 22, which was the #1 record year for that price range. And then retirement communities, like I mentioned before, are not experiencing the same. However, it is a segment which is highly sensitive to inflation. And why is that? Because they are looking at the prices of their necessities keep going up and they're kind of uncertain. So in this market, they choose to be a little bit safer in making their decisions. So keep that in mind if you're selling in a 55 plus. So let's go back here. Want to look here. As you see, active listings are up 2.3%. Under contract is down 6.9%, but the median list price sales is up 4.9%. I want to take you down here to the median days on market before contract. As you can see, we're down to 28 days. And then the days of supply on market is up to 80 days. So keep that in mind. Let's have those houses ready and market ready, move-in ready for these buyers, because as they're looking around and comparing, think about their necessities versus buying the home. They're going to choose the home that is more move-in ready. Overall, as you can see, we are in the green when it comes to your annual appreciation over the monthly cost per square foot, and then over the annual, we are just slightly below at 0.9%. So overall, we're doing well. But if you have questions about a particular area, as you know, you can always reach out to me and always subscribe because we're going to take more deep dives so you can have more information. Give me a call, 480-340-2808, and I'll see and talk to you soon. Bye-bye, and thank you.